How to use Amazon accounting to increase your income. Being a seller on the world's largest e-commerce platform can be immensely rewarding, but just as challenging. Turning your online business into a lucrative venture takes more than a good product listing. You also need a solid understanding of Amazon accounting. Find out how you can go from surviving to thriving with a few of our tips and tricks. Before we dive in, let's talk about how Amazon accounting differs from other e-commerce accounting. Accounting for e-commerce is a different ballgame from the typical business accounting, more so when you are a seller on Amazon. There are a few extra considerations to mind, such as the following. FBA versus FBM. Some e-commerce sellers are under the Fulfillment by Amazon FBA arrangement, wherein they pass on their entire shipping responsibility to Amazon by handing off some or all of their inventory. Such service isn't available on other online marketplaces like eBay and Etsy, and this step is called Fulfillment by Merchant (FBM). Accounting for inventory under the FBA is slightly more complicated than FBM of other platforms, since it's harder to keep track of your products. They can be at a fulfillment warehouse, en route to buyers, or for returns. Since Amazon only relays the information to the seller, you don't have an accurate picture of your inventory figures compared to when you manage the entire order processing. Taxation. VAT and sales tax are already confusing to begin with. And with FBA in the picture, Amazon accounting becomes even more cumbersome. If you are selling in the USA via FBA, your tax nexus includes states where your products are warehoused. The same principle applies to pan-European FBA, but not the same term. Talk to an Amazon accounting expert from Sterlinx Global to determine if there is a tax implication to your business and how you can address it. Seller fees. Another aspect where Amazon accounting is unlike accounting for other e-commerce platforms is the fees. As the largest online marketplace, Amazon understands how powerful its reach can be. If you want to make more sales, selling on the platform comes at a higher price. Commission and FBA fees are some of the expenses weighing on your margins. Let's get to our main topic: how Amazon sellers can scale with accounting. Growing your online store takes more than a keen eye for business. You also need to do your Amazon accounting right. Improve financial performance by being savvy with your accounts and books. First on the list, stick to the accrual-based method. There are two business accounting techniques: accrual and cash basis. Of the two, it's better to use accrual method to see your revenue streams and expenses more clearly. You recognize sales when earned and expenses as incurred, regardless of when cash exchanged hands. As such, you can make more strategic decisions for income growth from the derived profitability figures. That said, it doesn't mean you should write off the cash basis method altogether. The technique comes in handy when tracking cash flow. However, don't fall for the trap that being cash rich is tantamount to profitability. It isn't, since it doesn't consider accounts payables. Secondly, pay attention to your inventory. If you want to boost your bottom line, one of the essential Amazon accounting items to monitor is your inventory. The e-commerce charges fees for products under FBA in exchange for handling storage and shipping. That's the price of convenience. However, such inventory related costs may set you back more than they should narrowing your margins. Figure out which products are more cost effective with FBA. Amazon charges a range of fees related to inventory, including storage and returns processing fees, which can then add up to your cost of goods sold. Identify items that cost you more to maintain in your store, then remove altogether. If Amazon fees are trimming your profits, consider opting out of the FBA to keep inventory cost down. A good rule of thumb is to downgrade when the total number of units sold is less than 40 per month. Third point is still inventory related. Focus on profitable products. Another way to increase your Amazon earnings is by identifying products with high returns and focusing efforts on marketing them. Many vendors make the mistake of maintaining excessive inventory in anticipation of higher profits with sudden increased demand. However, betting on trends doesn't always translate to sales and higher earnings unless you have researched them extensively. Instead, determine your top performing products based on their margins and develop cost-effective strategies like campaigns and bundling to drive sales. As for your poor performers, decide whether they are worth the push or better off taken out. Fourth on the list, keep a close eye on expenses. Inventory related fees aren't the only cost you should be worried about. Your overhead expenses will also weigh on your earnings. Understand how the platform seller fees impact performance. You are likely incurring other expenses necessary to run your online business, including utilities. The higher your operational costs are, the narrower your margins will be. And an ideal net profit margin is around 40%. Break down expenses and examine them on a more granular level to identify areas for improvement. For example, you may be better off with an individual seller account, purchasing stock with lower shipping fees, or streamlining operations. Number 5 is quite tricky. Calculate the correct tax. Whether you are collecting VAT or sales tax, it is your responsibility to remit these taxes to the proper authorities. But with different local tax regulations in every market you are in, it's easy to get confused with compliance. Paying the incorrect amount on your tax liabilities results in unnecessary cost to your e-commerce business. When you overpay, you cannot refund, but when you remit less than the tax due, you will be fined. Aim to compute the correct tax amounts to improve your bottom line. Sixth, work with professionals. If you want your store to gain traction and increase earnings but are unsure where to begin, it's better to consult an Amazon accounting expert such as ourselves at Sterlinx Global. We have the expertise and experience in managing and analyzing accounts, as well as providing accurate financial reports so you can make sound business decisions. By handing off accounting services to professionals, you can focus more on growing your business instead of figuring out what the numbers mean. Here are some frequently asked questions on Amazon accounting. Would VAT or sales tax reduce my income? No, it shouldn't. Consumption taxes like VAT and sales tax are charged to the buyers. As a seller, you are responsible for collecting and remitting them to the government. However, many Amazon sellers incorrectly estimate their tax liabilities. Where this happens, taxes become an additional expense that cuts through your profits. Can I handle Amazon accounting myself? Yes, you can manage Amazon accounting on your own if you have a good grasp of the basics, but it can be time consuming, especially when you are meticulous in dealing with numbers. Also, it diverts your attention and effort away from activities with better returns, such as creating campaigns and improving brand reputation. Amazon deposits an amount in my bank account regularly. Should I consider this as sales? No, you shouldn't. It's a common mistake of Amazon sellers to record these bank deposits as revenues. While these cash deposits include store sales, they are net of fees charged by the e-commerce platform. Moreover, the remitted funds do not reflect the date of actual sales. Avoid using these as a gauge of your profitability. Scaling your online store operations takes more than savvy marketing campaigns. You must also have a deep understanding of Amazon accounting to spot pain points in your profitability and address them. Let an accounting firm like Sterlinx Global help in easing the burden so you can redirect your efforts to revenue generating activities. Thanks for watching our video. If you enjoy watching this and want to learn more, please like, follow and subscribe to our YouTube channel, and catch you on the next one.